RNC fundamentally is a tremendous investment opportunity at the present time. Most junior companies are lucky to have one great asset, and we're fortunate to have two great assets. So there's the Beta Hunt gold and nickel mine in Western Australia. Obviously, the investors who've been following the story were very aware of the Father's Day vein discovery last fall, where we pulled out 25,000 plus ounces out of the size of a living room, that generated that gold at a 40% gold or 400,000 gram per ton content. So again, we think one of the most exciting gold discoveries that's been made, in a very long time. The great thing there is there's a massive amount of exploration potential. That's why we acquired the asset in the first place. We're now able to start to drill that potential off, and we've been, we're coming to the end of a 40,000 meter campaign. But from an investment perspective, fundamentally, you've got this massive exploration potential. We've got 4 shears spread across 4 kilometers, that have been barely tested to date. We have this potential for this high repeat of a Father's Day vein, where 150 meters down into each of these shears, where it intersects the sediment layer, we have the potential for more of these high grade discoveries to be made. And then the best part about it all is that there are very few multi-million ounce deposits that have been discovered in low risk jurisdictions. And not only are we in the basically the backyard of Australia's main gold region, we have all the mine infrastructure already in place that we acquired, which cost you $400 million to replace today. So that's Beta Hunt. And then on the Dumont side, we're wrapping up the updated feasibility study on what is the largest nickel cobalt project, development project in the world. It's one of the largest sulfide discoveries ever. We're sitting up in Quebec in the Abitibi next to a pile of infrastructure. And so in a market, I think the market now is beginning to realize how much nickel the world is going to need by 2025, 2030. Glencore just put a report out yesterday saying, we need 1.3 million tons by 2030. And so, Dumont is one of the few projects that's ready to meet that need. So, we're very excited about, what we can do with that asset. So you've got Beta Hunt, you've got Dumont, and fundamentally our team is going to work to whatever way maximizes the value for shareholders for each of those assets.
Well, thanks for that summary. Actually, we did a bit of work before this call to understand a little bit more about the company, and it struck us that you, from the get-go, have designed this not like a junior, but something bigger. There's been a bit more rigor to the planning. It would seem, as I'm saying this as an outsider, there's been a bit of rigor to the planning, and of course, I can't get away from the obvious statement. If I look back to your share price back in beginning of September to now, it's 5 times. So if I was in beginning of September, I'd have 5 times the value on my shares. That's a pretty impressive type of return. And I think a lot of companies would be very, very happy with that. But can you tell us a little bit about the strategy? I mean, how have you mapped this out? How have you planned it from when you started to today, and perhaps a little bit about where it's going?
Yeah, no, I mean, the board and management team here have come from majors. All of us generally worked at Inco or Falconbridge at one point in time. I worked at Quadra for several years as well. So yeah, in terms of approach, we are looking to try and build out a multi-asset mining company. That was the design from day one when we went public in 2010. Our first key asset was obviously Dumont, which we've taken through to fully permitted feasibility study complete, ready to go mine. But we realized a few years ago is that while the EV story is exciting, it's still at that time was still 4 or 5 years away. So in the meantime, we looked pretty aggressively at a range of assets. So we picked up 2 assets at the bottom of the market in early 2016: the Reed copper mine, which we own 30% of, and then Beta Hunt. And so we were fortunate to take those 2 smaller assets. Reed, we generated 120% return on capital over 3 years, which was a fantastic investment. Beta Hunt, to be honest, we struggled out of the gate with that. But then obviously with the big discovery last year, it validated our investment in that asset, which is, again, created several $100 million of market cap just off that one, particular investment.
Yes, I guess there's a little bit of fortune to that, but there's also, it strikes me, a lot of planning involved to be fortunate enough to make that find. But what are you going to be doing over the next sort of 12, 18 months to kind of repeat that success, repeat that kind of value creation? I mean, is there a plan, and what is it?
Yeah, so we just announced that we exercised the option on that Higginsville property. Again, we had a mine that needed a mill. They had a mill that needed a mine. So for us, that was a perfect transaction with some real synergy. That's a word that gets misused quite a bit, but in this case, there is some real synergy between that set of assets. And that'll really allow us to take Beta Hunt to a strong cash flowing position, and provide the foundation for it to become the very large gold mine that we think it has the potential to become. And then on the Dumont front, we are the operator with that, with our partner Waterton. And so the key there is that asset right now is fully funded from the cash that exists within the joint venture already. So there's no call on the company's cash to date, and we'll look to partner at JV it in a way that makes sense. For RNC shareholders, if we get a bid for the entire asset that makes sense, we'll sell the asset. At the end of the day, I have most of my net worth in this company, so I am going to do my focus is on doing what's best for our shareholders.
Well, it's interesting. We did happen to take a look at the buying, and obviously you have been a big buyer over the past few months, and as have some of the other management teams. So I think that's indicative of your view of whether this thing will work or not. And then just on that, I mean, how do you think you're doing in relation to your peers, for instance? I mean, I do want to come onto the Higginsville in a second, but just talk to me about how you think you've done in 2018 and beginning of 2019.
Yeah, 19. Yeah, I mean, obviously the prices come off in the first half of 2019, but if you look through 2018, 2019, as you indicated, we're up 4 or 5x, over that time frame. If you go back to early 2016, when we made that, shift to pick up those additional assets, we're up, 2 to 3x. From that time frame, at a time where the value of most junior companies just continue to erode away, post that date. So, again, I'd like to think in terms of that, overall time frame, in terms of the value that we've created to date. And again, with Beta Hunt, we're really just getting going. The resource drilling is where it is. We're going to start the exploration drilling now. And again, we want to really show people just how big this gold mine can be. And as I said, we're in the enviable position of having one of the few nickel cobalt projects that's ready to go in a market that's desperate for nickel and cobalt.
Well, yeah, actually, we talked to I think Anthony Maluski last week, the CEO of Cobalt 27. I think you've recently done not necessarily recently, done a deal with them. He was very positive about the Dumont project and being involved with that. I mean, how did that deal come about? Who approached you?
So they picked up an existing royalty back in 2015. Again, we've tried to be as creative as possible in terms of some of the financing that we've done, given that the equity markets have largely been closed for most of the last 8 years for development projects. And so they picked up an existing royalty from Orion Mine Finance, and they purchased that back a year ago, February. And I think, in terms of the, endorsement for Dumont, is pretty profound in the sense that, that Dumont royalty acquisition was their very first non-physical metal transaction. So, this is a group that probably spent more time than just about anybody on the planet looking at nickel cobalt assets. And the first asset that they make an investment in is in Dumont. And then, secondly, that they continue to I think actively promote it as a mine that they see as one of the few projects that gets built this cycle.